The issue is we're indebted as a world. It's not just sovereigns, it's companies, it's individuals, like everybody's living on debt. You're borrowing from the future. And that is creating this problem that, you've got this every single, and this is the biggest problem here, Anthony, is that every single unit of debt is creating a smaller unit of productivity or less productivity per unit of debt. And that's the big issue. And so because of that, you're in what's called this debt spiral where you just need to keep borrowing to the borrowing, begets more borrowing. And there's no real solution for it except expansion of the money supply, debasing the currency, paying down old debt with cheaper dollars or cheaper euros or cheaper won, whatever it may be, and continuing the charade. And the cat's out of the bag. People are realizing this, and this is why you see things like gold, and I think to some extent Bitcoin are rising in the face of all this because of this very issue that there's no place to hide.
On this episode of What the Finance podcast, I have the pleasure of welcoming on for the first time, James Lavish. So James is the managing partner at the Bitcoin Opportunity Fund and writer at the Informationist newsletter. So James, thanks so much for coming on the podcast today.
Well, it's good to be here, Anthony. Thank you for having me. Looking forward to it.
Yeah, really looking forward to the conversation. And I want to start where I always start with my guests, starting very broad, and then we can narrow down on the things that you find interesting. But what are you currently seeing in the markets?
What am I not saying?
Easy question.
That's the loaded question that everybody every investor in the world is asking the same thing. Like, what am I looking at? Like this market is just insane. It's been quite volatile. It's been volatile to the upside in Bitcoin since Trump was elected. It's been volatile in Bitcoin since Trump was elected. It's been volatile in the market since we started talking about tariffs. And then, of course, you've got the Fed weighing in. You've got comments from, not just Powell, but Fed governors and Fed officials, and just a lot of noise. And so what am I looking at? Like I typically, as you and I kind of touched on before the show started, I typically look at the bond market and what's going on there. But the crazy thing is just how volatile these markets have been and how much headline risk you have as an investor. If you're not invested long term and you don't have a good base of either diversification or something that you really believe in to hold the value of your investments, then you're nervous right now, and you feel like you're taking undue risk day to day. And every single time you wake up, every single day you wake up, you have a new headline, and then the headline changes midday, and the markets are whipping all over the place because of it. So what am I seeing? I'm seeing tons of volatility, and not just in the stock market. I'm seeing volatility in the bond market, and that's telling. It's telling of there's unrest, there's instability out there, and quite a bit of uncertainty. And we know that markets hate uncertainty. So that's your clue.
Yeah, a lot to unpack. So I know, you said you didn't want to mention it, all the tariffs and all that talk, but is that really the driver of all this uncertainty, or do you think this is something that's been building up over a longer period of time? How are you seeing it?
Well, I mean, the uncertainty started back in the fall when we started getting some questionable indicators on the economy, economic indicators, and the Fed turned around and they lowered rates really quickly, and took the Fed funds rate down 1% from 5.5 to 4.5, and so at the same time as they were doing that, though, the bond yields on the longer term treasuries went up, and that gave people some pause, and they're trying to figure out what's going on there. And this all happened, right around the election time, right around September, October, November. And so people were trying to figure out like what is happening, what's going on. Well, investors are worried for a couple things. They're worried about long-term inflation and the fact that the Fed was taking down rates really quickly seemed to maybe be political the way they were doing it. But at the same time, the interest rates on the 10-year were going up, and they went up by a full percent in that same period. Why would they go up? Well, people were selling 10-year treasuries because they were demanding a higher yield. And this is where we get into the whole bond vigilante discussion. And they're demanding a higher yield for a couple of reasons. First of all, they're concerned that we would have inflation, a flare up in inflation longer term, and they need to be compensated for that with a higher interest rate. And that is how you get to a real rate of return. You have to have an interest rate on your bond that's higher than the inflation rate. And we all know the inflation rate is very tied to it's tied to the expansion of the money supply. Okay, so the rate of the expansion of the money supply. Going to that, we also know that coming into the end of this year, we had a Treasury Secretary, Janet Yellen, who was really leaning on the short end of the curve to manage the deficit that this government's been running. The government's been running multi-trillion-dollar deficits for years now, and it's just adding to the debt. The debt is now at $36.5 trillion. It's only growing. The reason it isn't growing today is because we're at our limit, and all we're doing is spending money out of the Treasury General account, which is basically the TGA, which is the checking account for the Treasury. And we're just spending money out of that because we can't add to the debt right now, not until we get some sort of debt ceiling agreement from Congress. And they're the ones that, we blame the Treasury a lot about all the spending, but they're just enabling it. They're just out there doing the bidding of Congress. And so they're the ones who are spending all this money. And so we know that she'd been leaning on the short end of the curve. Scott Bessent, now the new Treasury Secretary, was very critical on Janet Yellen about how she was using these short-term T-bills to borrow money and piling them up. And he said that she should have moved out on the curve. She should have been issuing bonds that were longer dated. Well, yes and no. Yes, she should have anticipated that there was going to be high inflation after the Treasury and the Fed teamed up to print $5 trillion in 2021, 2022. She should have known that this was going to happen. I mean, she was the chairman of the Fed before she was the secretary of the Treasury. So, of course, she knew that was going to be inflationary. She should have moved out on the curve and been issuing longer dated treasuries rather than staying on the short end, but she didn't. Well, now you get to where Scott Bessent is the Treasury Secretary. He was very critical about it and very vocal about it, but now he's got the same problem. He's got the same problem because interest rates are still high and he can't move out on the curve. And the worst thing about it, though, Anthony, is that we have $9 trillion of debt that's maturing this year. $9 trillion of Treasury debt that's maturing this year. So Janet Yellen kicked that can down the road. Well, that can, we're down the road. Like, we've got to deal with this. And so, of course, Scott is going to, Bessent is going to, he's going to issue as much as he can in the short end of the curve while he waits for interest rates to come down. And they keep hammering the Fed to lower interest rates because of this problem. They understand that the longer interest rates stay up at this level, the longer that the U.S. Treasury is refinancing all that debt at these high rates, the longer that we have to pay over $1 trillion of interest expense on our debt every single year, which means that it only expands that or holds that deficit to multi-trillion dollars. You're spending over $1 trillion of money each year just on interest on your debt. Well, of course, you're going to be running deficits. The math doesn't add up for you to get into surplus. So everything you want to say about what's going on with the Doge Commission and how much they're cutting, yeah, they've cut a couple $100 billion, we think, of fat and fraud and whatever else they're looking for. The Doge Commission is not going to be able to solve this problem alone. We need to somehow get productivity up, not just taxes, but taxes due to higher real productivity. That's what we need to happen. And so now you've got a market that's very concerned that we're getting other indicators that are looking like the economy's rolling over. The economy's rolling over, and now they're worried. They're worried that we're going to get into a period here of recession at the same time that we have inflation, which, because of these tariffs, which comes all the way back full circle to what your question is. Are the tariffs going to be inflationary? If they are, is it structural inflation or is it like a one-time deal? And then what does that do to prices longer term, especially if we're in a recession? And if we're in a recession, we've got rising prices. That's called stagflation, which is just the absolute nightmare for the Fed. It's kind of what the market is looking at, worried about, concerned with, and that gives you clues to why it's been selling off lately.
Yeah, it seems like the perfect storm of, as you're saying, too much debt, high interest rates, high inflation, government spending. I guess they are all interconnected. Do you see? I guess the high interest rates are, and the more you're paying out in interest, is actually inflationary as well because there's more money supply in the system. So then that's another issue.
Yeah, I mean, deficits, fiscal deficits are inflationary because you're basically bringing forward future productivity into the now, right? So and that's inflationary. It's basically you're just adding currency into the you're spending into the economy through government spending, which so that's the problem. Is we've got these huge deficits we're running, and there's really no solution for it right now. And so you've got investors concerned about that. They're concerned that they're not getting compensated enough on their longer dated treasuries, because eventually the treasury is going to, Besant is going to have to move out on the curve at some point here and start issuing debt that's longer dated. He's going to have to, come up with a plan that allows for longer dated maturities. Well, the issue here is that the 10 years not playing along, the 30 years not playing along. We've got interest rates that are now, just taking a peek at my screen today. You've got interest rates in the 10 year that are up 4.38%. The 30 years up at 4.82%. They've been knocking on 5% door recently, and that's an issue. That's only going to cause these deficits to blow out even further. So it's a big problem that investors are very aware of, especially bond investors. And now the stock market is very aware that the earnings are going to be impacted likely from these tariffs, unless something happens where the tariffs are pulled off the table or we get great negotiations out of them, and and it ends up not being as bad as people fear. And so that's kind of the question. Are we going to really grind into a recession here, or is the market just going to have a steep drawdown, and then the Fed and the Treasury react by, of course, printing money and saving the market again? Those are the big questions right now.
Yeah, and I guess the challenge is if the Fed cuts interest rates, the last times they did that, it actually was high. Rates went higher. Yields went higher. Yeah. So that's another issue. If people think inflation is sticky, then it could actually have the counter consequence. They're sort of stuck in this corner and not really many options to resolve it.
Right. And that's why the tariffs are so important. That's why people are looking at the tariffs, because if the tariffs are inflationary ultimately, at the same time that we have a grinding down in the economy, that's a bad combination. And you're seeing the market get really skittish about that. And that's the big concern here, is how much is this going to affect the economy? And, quite honestly, we're very financialized here in the United States. Our economy, it's extremely tightly tied to the stock market, to the investment world. And so if you've got the stock market and investments, securities selling off, that is problematic for the economy too, because that generates a lot of income for people that they're using out there, or capital gains that they're using to live off of, especially the boomers and the older generation. So this is an issue. It's an issue that is not going away quite yet, and that's why we keep seeing the market, have these kind of violent moves around headlines. It all just depends on the flavor of the day. Are we going to back off China? Are we going to strong arm them? Are we going to strangle the trade? And what's going to happen here? And how bad is it going to get?
Do you see a pathway through for this to be resolved or to be better?
Yeah, I mean the trade issue, sure, there's a path. The path is to come to the table and get some, quick negotiations and the I guess the most beneficial outcome for the market would be that Trump ends up getting concessions. It helps long term our local manufacturing, our domestic manufacturing, and the ability for companies to build facilities here and be profitable, and not at the expense of the those low margins that we've been able to export to the world. And so that would be a great outcome. It would calm the markets. It would bring back manufacturing to the United States. That's not going to happen overnight. That takes a long time. We have to understand that. Everybody realizes that. But if we can do that, that would be good for the United States. It's just going to take time. But this incessant, sword, saber rattling that's what's rattling the markets. That's what's roiling the markets and making, creating so much uncertainty. So markets hate uncertainty. We know that. And so we've got to kind of get through this period where we're not grinding into a recession here at the same time that we have this tariff fight going on, which could be quite inflationary short term. But if we can get through that path, Trump he did put that 90-day pause on the tariffs to bring countries to the table to negotiate, which was good. I was speculating he might do that a couple of weeks ago, and he ended up doing it, which is I think a positive, and that's kind of calmed down markets a little bit. But you're still watching the bond market uneasy here. This 10-year should not be moving around at 2-3% a day. That's just insane for the 10-year treasury to be moving that much. This is the benchmark bond of the world, and it's been quite volatile. And so if you look at things like the MOVE index, so people talk about the VIX. The VIX is the measure of volatility on the stock market. And the MOVE index, MOVE, it's kind of like the VIX for the bond market. And that's been up. The VIX it's been pretty high. And so is it high? Is it historically high? No, but it has been moving up, and that's been a concern. So
yeah, definitely. So, but then I guess even in the longer term, even if Trump and Scott Bessent get through this near term challenges, I feel like in the long term, there's still the issues of extremely high debt. Even if you have low interest rates, a deficit, it does seem like an unsustainable trajectory of where the US and I guess most other Western countries are going.
Oh yeah. I actually just put out a post today about, the growing debt around the world. And it was a chart that was put out by Bloomberg this morning. It's global public debt is rising. It's way over the projections. It's not surprising. I mean, if you listen to people like Lynn Alden and Luke Groman, Larry Lepard, we've been talking about the debt problem for so long. I mean, this is nothing new. It's nothing that anybody should be surprised by. The issue is we're indebted as a world. It's not just sovereigns, it's companies, it's individuals, like everybody's living on debt. You're borrowing from the future. And that is creating this problem that, you've got this and this is the biggest problem here, Anthony, is that every single unit of debt is creating a smaller unit of productivity or less productivity per unit of debt. And that's the big issue. And so because of that, you're in what's called this debt spiral where you just need to keep borrowing to the borrowing, begets more borrowing. And there's no real solution for it except expansion of the money supply, debasing the currency, paying down old debt with cheaper dollars or cheaper euros or cheaper won, whatever it may be, and continuing the charade. And the cat's out of the bag. People are realizing this, and this is why you see things like gold And I think to some extent, Bitcoin are rising in the face of all this because of this very issue that there's no place to hide. You can't hide in treasuries. This is supposed to be the global reserve asset where you can keep your money. It'll be sound. It'll be available to you. They will not default on that. And I agree, but they soft default on it every single day. And they soft default on it by creating more money, expanding the money supply, allowing for high structural inflation, which debases the currency that this bond is based in. It creates it creates a situation where when you go to the end of maturity on your bond, you're getting dollars that are worth far less than what you put into that bond. And so because the interest rate on that bond is not keeping up with the expansion of the money supply, you're getting a negative real return. And people are catching on to this. Big countries are catching on to this. And that's why we're seeing countries like China and, of course, Russia to a greater extent because of geopolitical issues, but not buying U.S. treasuries. They want to get away from it. So we talk about the BRICS nations, Brazil, Russia, India, China, and South Africa. We talk about the BRICS, trying to create their own currency. Well, they're not trying to create their own currency. They're trying to get away from the system where they're beholden to holding U.S. treasuries because all world trade is done in U.S. dollars. They want to try to get away from that somehow, find a way to do trade at least with each other without dollars. Why? Because they don't want to hold treasuries. Why? Because they know that they're getting a real rate of return that's negative, that they're losing money on that trade. They don't want to hold these things. And they especially don't want to hold them because of that catastrophic, monumentally stupid thing that Biden and his administration did when they shut off Russia from the SWIFT system, the payment system, the world payment system, and seized treasuries, seized their assets. They basically told the world that, hey, if you do something we don't agree with, we might just take those treasuries that you have on your balance sheet. We may just seize them. How stupid is that when we need the world to buy our treasuries, right? So we did that. We're seeing demand for treasuries go down globally. And at the same time that we're running bigger and bigger deficits, at the same time that we're having inflation issues, at the same time that we're doing we're needing to borrow more and more and more money, and we need the world to buy our bonds. So when you hear about the BRICS nations, they're not going to come up with their own currency anytime soon, at least, because none of those leaders can be trusted to, have a sovereign currency that has, a hard backing. So, who's gonna manage that? Even if they backed it by gold, are they going to go into each other's gold reserves, into their vaults and audit those? No, of course not. So, who's going to believe each of those leaders? But what they're trying to do is they're trying to get away from having to use US dollars. And so that's why they're doing trade in other currencies. That's why they're accepting gold. That's why some of them are accepting Bitcoin and other cryptocurrencies, because they're like, we don't want to have to hold these dollars. We don't have to hold this debt. So these are all things that are weighing on the US Treasury as the global reserve asset of the world. Is it going to lose its status this year? I don't believe so. But is it signaling to the world that it has problems? There are cracks in the system? Absolutely. And that's what's giving people the big concern right there, because we know that we need to keep borrowing. This is unsustainable. The Treasury has said it's unsustainable. The Fed has said it's unsustainable. The White House has said it's unsustainable. They all know it's unsustainable, but we just keep going about our merry way and, borrowing and pretending that there's not going to be any, repercussion from it, but there will be. And that's what we're concerned about.
Yeah, it's definitely really concerning. But then I feel like, is there not this talk about this realignment and then shift away from the US being the sovereign dollar and I guess the safe haven? Do you believe that? Is that sort of what they're trying to do, and would that be successful?
Well, they're just trying to get out of it themselves. The BRICS, they don't want to be beholden to it. That's all. So it is a concern. we're nowhere near that happening right now, though. I mean, the world still wants dollars. It needs dollars. Yeah, the dollar's getting weaker here for a multitude of reasons, but this is not something that is going to happen overnight, in my opinion. But it is an issue that we've got to recognize, and we had better start doing something about it as a nation. And I'm hoping that we kind of wake up in Congress and the White House and try to figure out a solution here. I have a solution that we ought to be using. A lot of us talk about it. We talk about having Bitcoin as part of the treasury and putting it on our balance sheet, and that could help. And this is we're in the beginning stages of it, but I think that that's kind of a path that we need to explore. And so when you ask, is there a solution? Is there a path that we can get out of this? Yes, it's very narrow. It's a very narrow path, and we better be walking on it soon. That's my personal opinion. I don't think this all blows up tomorrow, but I don't think it ends well either, whenever it does end.
Yeah, but it is a challenge because I guess there's the massive Eurodollar markets. As you say, there's all these foreigners who owe US dollars, so they actually can't go off them because they have this debt denominated in the US dollar, not even with other counterparts. So I guess that's
right.
It's keeping people in.
Right. It's massive, and they need it. So we need dollars. So everybody, the whole world needs dollars, so we've got to get them to them. And so that's why I think you'll start hearing, about swap lines opening up, and why would we do that? For your listeners, why would we open swap lines and allow Japan or Europe or whoever borrow dollars from us, from the Fed? Why would we do that? Well, it's pretty simple, because the only other way for them to get dollars is to sell the treasuries that they have on their balance sheet. We don't want them doing that. We want them to be buying treasuries, not selling them. So we'll let them borrow more dollars. So what does that do? It expands the money supply, So it's just, this is just an ongoing, unstoppable train, and that's Lynn's famous line that she just keeps putting out on Twitter in the meme, that nothing stops this train. And it's true. At this point, there's nothing that's stopping this train. So that's but that also is great for people who understand what's going on in gold and Bitcoin, and longer term, why these are assets that you need to own. In my opinion, Bitcoin is the one you really need to own.
Yeah, I was talking to Brent Johnson sort of a few days ago, and he was talking about how he thinks swap lines could be used as a negotiation tactic, which is a bit scary, but that's another thing where, similar to what Biden did with Russia, it's if you're negotiating with this dollar liquidity, then hang on, we need to push away even further.
Yeah, you're creating a situation where people want to get further and further away from the global reserve currency. And if they want to get away from the global reserve currency, the first thing they're going to do is get away from the global reserve asset. So what does that do to us? We need people to buy the treasury. So it just means that the Fed is going to have to keep printing money to buy these treasuries and create this money supply and create expansion of the money supply and debasement of the currency in order to keep this whole thing going. And at some point, the charade is over. There's no chairs left. The music stops, and we're standing there without the global reserve asset anymore. And that will be the biggest problem.
Yeah, it definitely seems like it's, as you said, it's on the horizon. It's not here now, but it does seem to be the trajectory of where things are going.
I want to make it clear. I'm not saying this is happening tomorrow. I'm just saying that this is the path we're on, that we've been on this path since 1971. If you look at it, it is accelerating. And that's what we have to be concerned about. It's accelerating. The amount of debt that we're needing to create in order to keep the charade going is accelerating. And just like I said before, the amount of debt it takes for each unit of productivity is growing as well, and that's a huge problem.
Yeah, so you mentioned Bitcoin sort of being a part of the federal not the reserve, but yeah, the holdings, the assets that are held. So what would that look like? Do you see it being sort of a portion as well as gold and the revaluing of gold, or how do you imagine it?
Yeah. So the way I see it is, Well, first of all, let's back up. We had Cynthia Lummis, the senator from Wyoming. She authored this bill a couple of years ago, and it's the Bitcoin Act. And basically, what it said was that she wanted the United States to buy 1 million Bitcoin, 200,000 Bitcoin per year for the next 5 years. And in doing that, adding that to the balance sheet would strengthen the balance sheet, and eventually be able to pay off quite a bit of the debt from the appreciation of that Bitcoin over time. So now, flash forward, that act kind of got ignored by most people. Most congressmen and senators just kind of ignored it all the way through the Biden administration, and then finally you get the Trump administration comes in, and they're very crypto and Bitcoin friendly. And so now you've got people in like Scott Bessent, you've got Lutnick, you've got David Sachs. These are all people in the administration who understand. They deeply understand crypto and Bitcoin. They understand all this stuff. And so you're in a situation now where it's being embraced. Now, Trump signs an executive order about a month and a half ago that basically it created a Bitcoin strategic reserve. Now, it was a little bit disappointing to the Bitcoin investors because they were hoping that the Bitcoin strategic reserve would include a measure to go and buy Bitcoin for the reserve, which it didn't. All it did was it just said that we're not going to sell the Bitcoin that we have in the United States Treasury, which we believe is about 200,000 Bitcoin that's left. The Biden administration and others sold about 200,000 Bitcoin before this, so that we estimate. But there's about 200,000 Bitcoin that the United States has that has been seized from fraudulent or illicit activities. And so they created, through executive order, Trump created this reserve. Okay, so the only way we can add to the reserve at this point is through something that's budget neutral, meaning that we've got to sell something or come up with a way to buy it without adding to the budget. There are a few ways you can do that. Speculation is that maybe let's sell some gold to do it. I don't know about that. I don't know how likely that is. It's more likely to me that the second part of this this executive order was a strategic crypto stockpile. And that stockpile is all the other cryptocurrencies that have been seized through illicit or illegal activities, and are just sitting there on the Fed or on the government balance sheet. And so now they can't add to it, even budget neutral. So it makes sense that they would sell those and buy Bitcoin with it at some point in the future. We'll see if and when that happens. So, but all of that is going on, and you've got this now momentum of this positive kind of understanding and energy around Bitcoin and crypto in this administration. And so why is that important? Well, it's important because now Cynthia Lummis, Senator Lummis, gets some momentum behind her, and now she's got 6 or maybe 7 co-sponsors of this Bitcoin Act, and it's being brought back to the floor. And so this is now going to find footing, and hopefully it's going to snake its way through legislation, go through that path. It's a gauntlet it's got to run. It's got to go through committees. It's got to go through comment periods. It's got to go through adjustments and concessions and changes in order to get to a spot where they can bring it to the floor for a vote someday. Do I think that happens this year? I don't know. That's pretty early. I would hope that happens next year. I would hope it happens before the midterms, but we'll see. We'll see what happens. But that's a very positive development. And I think that what that does, though, is all of this talk of the United States holding Bitcoin and buying Bitcoin it's tipped off a game theory now for other sovereigns to be out there and participating in Bitcoin too, which is what I believe we're partially what we're seeing here is that you've got large companies and you've got sovereigns saying, I need to own some of this. If the United States is going to own it, this thing is not going to zero. I need to own some too. And I need to understand it intimately to understand exactly what I own and why. And that's what you're seeing. You're seeing an expansion of the understanding of it, the knowledge base of it. And it's, it's not that it's going mainstream. It's more that it's becoming something where rather than being a risk to own, it's becoming an asset that has a risk to not own any.
Yeah, it's a great way to put it. It does seem like the US is sort of the furthest ahead in that regard. And I think, Abu Dhabi investment fund has maybe bought some, and there's a few others as well. But it does, and if I look at the other side of the other realignments of BRICS, they seem to be going the other way. They seem to be focused on gold, precious metals, as the major store of asset that they're looking at.
Yeah, I mean, and you're seeing gold rise in price for good reason. Everything we talked about before. I mean, gold has been the flight to safety asset for I mean, well, it's been volatile in periods, but it's been a flight to safety asset for a long time, especially since 1971. But this is thousands of years old. It's trusted, it's known, people understand it. Of course, you've got investors who are looking for places to hide. Gold is going to be there. And would make sense because of everything we just talked about with questions of the treasury and expansion of that money supply. So gold holds its value against the expansion of the money supply pretty well. And I think Bitcoin is in that same exact boat. It's quite volatile. It's a very young asset. Remember, this is only 15 years old. Gold is thousands of years old. So for Bitcoin to be already 1/10 the size of gold in just 15 years, that's just mind-boggling. And so that should tell you how rapidly this is being adopted. And if you want to really understand the adoption rate, look at the hash rate and just how much computing power it takes to mine Bitcoin now. And that hash rate has been going up steadily and actually pretty steeply recently, which makes me believe that, or question, or speculate that there are some sovereigns out there, big sovereigns, that are mining Bitcoin through their own energy supply and not out in the markets buying it, but mining it at a steep loss because they don't care about losing money while they mine it. It's better than just paying for it outright in the market and having everybody know that you're out there buying it, whether it's Russia or China or whoever it is. They can be mining this off their own energy supply and not telling anybody. And look at the hash rate. It seems like there's some really big players out there pushing up this hash rate to a point where it wouldn't make sense for companies that are trying to be profitable, especially public mining companies, to be hashing at this level.
Yeah, no, great point. So James, thanks so much for coming on today. We sort of touched on so many different different aspects of the markets and I guess the safe havens and what's going to happen in the future. My last question is, what is one message you want people to take away from our conversation?
I think that my message is, look, I'm ultimately optimistic. I talk about all these things that are problematic and that worry me, but I'm optimistic because we talked about it before the show. I'm managing partner of the Bitcoin Opportunity Fund. We see massive amount of opportunity in the Bitcoin space. We see tons of opportunity to not just protect your capital, but to profit, to find things that are highly profitable and new companies, new businesses built on this Bitcoin platform. And we're super excited. We remain very, very confident long-term in this asset class. And we're excited to be investing in it. So I hope that you can share that optimism. If you don't understand Bitcoin, please do not just dismiss it. I've been on Wall Street for over 30 years, and I dismissed it 3 times before I finally allowed my little lizard brain to accept that there may be a different way here. And this is something that is it's not just groundbreaking, it's world changing. And I believe that we are just at the beginning stages of it. So my message is there is hope. There really is hope. Bitcoin's at the center of it. And I think that that you can be optimistic too, truly.
It's a great message to take away. Yeah, it can be so easy to get doom and gloom when you see all the news going around the world and everything that's happening in the markets. But as you say, there is a positive future. Where can people find what you do? I know we've talked about your newsletter. Is that the best place?
Yeah, I mean, if you're interested in the Informationist, it's a newsletter that I put out every week, every Sunday, and it simplifies all these topics. Just one topic simplified every Sunday. It's got 40,000 subscribers, grown like crazy. I'm super thankful and appreciative, and and I love doing it. And so that's on Substack. You can find the link right in my Twitter profile. And then, of course, if you're interested in Bitcoin, the Bitcoin Opportunity Fund, and you're an accredited investor, which is it's easy to figure out. So, but if you're interested in the fund, you can go to bitcoinopportunity.fund and just give us your name, and we can reach out to you. We can send you some information and or talk to you if you're interested. We just started raising fund too. It's going great. We're excited. So, but thank you for having me on, Anthony. I appreciate talking to you, and I look forward to the next time.
Yeah, thanks so much. Yeah, we'll have to do it again soon. But I'll put those all in the description below. And yeah, thanks again.
Awesome.
Hey everyone, thank you for listening. I really appreciate the support. If you've got value out of this, I'd really appreciate it if you could like, subscribe, or comment. You know, good or bad feedback. I'm always open to that. But it really helps with the channel. As I said before, only about 14% of people actually subscribe to this channel. So if you were to that, it would really help. It could mean we could continue to grow. If not, thanks for watching, and see you on the next show. And you also might like this video right here. All right, thanks again.